Hello traders, this is Rich from Tradesight. This is the market preview for Wednesday, May 14th, 2014. We had there's no other way to describe this, just really a classic measuring day as far as price action went in the market today. We had a pretty powerful day yesterday where we broke out of a range, and today was really just a kind of a resting and testing day, if you will, where we just kind of went back and forth and really didn't do anything too much. The Nasdaq and the ESI were both basically flat on the day. The only knock was that the advanced declines were somewhat negative on New York by about 300 issues, which is really no big deal. But we're minus almost 900 issues on Nasdaq, which was fairly unimpressive, all things considered. Let's do a little bit of change up here today. Instead of looking at the levels, which we usually do, which are essentially the same now, let's take a look at the pure price action, and then move on to the market internals and also the intermarkets. Here's a look at the ES futures. You can see that we're trapped in this lateral range back and forth, and then the previous session we finally had a gap up, and we expanded the range to the upside and closed at a new high. Today was essentially just a measuring day. We didn't do too much. We did close up on the day by a small fraction, but didn't do too much to really expand the range on today's candle. But nonetheless, today is a new high close on the move and also a new intraday high. So we've got a range expansion in a measuring day. What you don't want to see tomorrow is a day where we get back into yesterday's real body, and especially penetrate 50% of the range of the Monday candle. What you really want to see tomorrow is you want to see the bulls get right back to work and take this back to the upside. So the burden proofs can be on the bulls, and if they do that, then we could be talking about 1900 plus. Here's a look at the Nasdaq side, which obviously looks much different than the ES side. The ES side has been and is still carrying much more relative strength. Basically, just back up into the upper regression channel here. Didn't really even challenge anything near the old highs, but this is something for the bulls to build on. We did close at a new high on this move, and if we can get some distance back above here and get rolling back to the upside, we could potentially see these previous highs in play again. Here's a look at the Dow futures, which actually have the most relative strength out of anything right now. We cleared this previous level right here 24 hours ago and got up and above that. Today was just a little bit of a resting day and a follow-through day, so we could definitely see some higher prices tomorrow. Definitely focus on the oil services and the transports tomorrow for a follow-through to the upside. If we do that, keep in mind this is essentially a breakaway gap to the upside after this consolidation here. So there's you can build a pretty good case that we could see some more upside just based on price here. Here's a look at the weekly advanced declines versus their indexes. On top, we've got the S&P. The S&P is definitely the more positive one right now. You can see that the red line here, which is the cumulative advanced decline line, is still positive. Back down here on the Nasdaq side of the market, the advanced decline is still pulling to the downside here, while price is still above it. This a little bit of a divergence here. We could definitely see a pull to the downside here on the actual Nasdaq index. So we really want to see the advanced decline start to get things together and get back to the upside. When you see these divergences, these are the ones you don't want to ignore, and these are generally the ones that can't be fixed and ultimately will force the market to succumb. All right, here's a look at the multi-sector daily chart. Here's where things need to be really kind of reconciled. We're still seeing weakness in the oil services, which is a negative. Really want to see them start to kick in. The purple line here, which represents the transports, is still very, very strong. You prefer to see at this point in the cycle the oil services and the transports working in tandem together, but right now we don't have that. The banking index is fairly weak in the XAU. Again, today was just a soft source of funds for the market overall. Here's a look at the sector watch list, ranked from best to worst. Transports Top Gun, which is definitely a positive. XOI was okay, was up on the day, and on a percentage basis outperformed the overall market. The OSX, unfortunately, was underperforming the market, so we want to see that kick back in. The BKX can be weak and lower on a relative basis as long as we see the late cycle stuff start to suck that up and perform. When we didn't see that today, the oil services the SOX was fairly weak, which is not a positive for the Nasdaq and the BTK after being top gun just a couple sessions ago and starting to reassert itself. Did fall back, so this breakout is still more rotational than not. For sure, with the weakness that we're seeing in Nasdaq, so really got to be careful and pick your spots here and make sure that you're choosing the longs that are that have the higher probability to perform for you. All right, so here's a look at the Dow Jones Transports. Broke out above the 8/8 level and closed above the risk level, and starting to climb higher into the overbought territory. 79.68 3/4 is going to be the next big level, which is going to be the plus 2/8 level. This is the group that you want to see continue at this point in the move. Taking a look now at the here's the OSX, which spent a second day closing below the 50 DMA. It was just an inside day, so we really need some resolution here. Going to be key support here at the 4/8 level. Don't want to see that loss. If that gets lost, that's definitely going to turn the chart to intermediate term negative, which would be very, very unwelcome at this stage. But for now, all we're doing is pulling back off of being in the overbought territory. So if they can circle the wagons here and reassert themselves and start to take another shot at this 8/8 level and then potentially the old highs, that would be welcome for the bulls. If this does roll over and continue lower, that's probably going to be it for the overall market. So this is definitely a key one to watch. The BTK index was the last laggard on the day, but it's really just kind of staging below the 50 DMA. What they really need to do is take out the 50 DMA and to start to get some momentum going here. If that happens, we're probably going to wind up seeing a MACD cross of the 0 line here, which would really start some upward momentum. For now, this is just a bounce. Which is right on time. We played with the 200 DMA, went lateral, which is what you would expect after the pullback that we had. Came back from plus 2A, so this is pretty much textbook. But what you really want to see is that 0 line get broken on the MACD, and then we can really start focusing on the BTKs for some longs again. But until that happens, it's just going to be kind of back and forth trading until they can get that done and cross that off the list. BKX today was fairly sloppy. What we really need to do is take this level out, get going up here, and resecure the 50. You can see there's still very little momentum and very little relative strength in the index because the MACD is still buried, but it does have a positive cross. But we're not really going to see any decent upside, and certainly the 8/8 level will not come into play until we get a cross of that 0 line. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.